Well, howdy folks, welcome to Sunday the 4th of February, and after quite a busy week really, lots of interesting things happen in the market, including news on interest rates and jobs numbers, the NFP on Friday, and all sorts of other bits and pieces of news, and some interesting market moves. So let's go through all these charts. I'll tell you what I think is going on and how I'm going to approach the trading next week. First of all, let's look at the Forex majors, the euro, the pound, and the dollar yen. As you can see from the day charts, we're not trading the euro and the pound, but they are coming off and sort of drifting downwards slowly as the dollar rallies. Our trade positions are short on the dollar yen and short on the Swiss yen. But just have a look at this dollar index chart, and it's quite interesting. Trading now outside of this rectangle, and it's been quite convincingly defeated. So let's get rid of that. And the other one we'll just leave in there. And that leaves us with this broadening or expanding pattern, megaphone pattern, which we see on the charts. Above us, we have the 100-day moving average at 104.20. Above that, we've got the 618 fib, and that's at about 104.80. And if we get above there, then we're right into this massive resistance zone with order blocks and supply and demand and all that sort of thing. It's possible we could get up there on the dollar index, but I don't think that's the most likely scenario. And I'm looking for this megaphone top to hold initially. Remember, this megaphone's moving outwards and broadening, so if this faffs around for a number of days, we could actually see the top of the megaphone at around about the 618 fib at about 104.80. It's also an 80 and a 20 number, which the market's often attracted to. The 80s and the 20s are price magnets for the price on most of the instruments that we trade. So whenever you see an 80 or a 20, and that coincides or is in confluence with some other level, then you know it's quite an important level. So we have that 104.80 above us here at the 618, the top of the megaphone if we faff around for a while. And for me, that's probably the ideal place. And megaphones are pretty important and powerful patterns. When the dollar starts moving down from the top of this megaphone, if that happens in fact, then we should see the euro and the pound and the other Forex majors begin to rally a bit against the dollar. And we'll also see the dollar yen coming down. I think that could take a number of days or weeks and perhaps even months. So I don't know, but we'll keep that in mind. This might be a fairly drawn out and slow topping process. On the stock charts, I'm still looking for these stock markets to come down. My overall view on the stock markets is that we'll see some consolidation and potentially a retraction, a pullback into February and March, and then a potential rally as we go towards the elections and potential interest rate cuts. We know that the chances of the Fed cutting interest rates in March are pretty slim right now. So we'll have to look towards May for that. So somewhere between March and May, and we'll give February away to a bit of a pullback, somewhere between March and May, we should see the markets begin to rally. And we'll be looking to switch direction and buy at that point. For the moment, however, I'm looking to sell NASDAQ, S&P, AMD, Nvidia, Apple, Tesla for a bit of a pullback and then a rally into those periods that I talked about earlier. We're going to have to continue to try to pick tops on NASDAQ and S&P with small trades, small amounts of risk. I have no problem with that because the move down, the pullback could be significantly bigger than the little bits of risk that we take at the top. I'm going to point out two key chart levels that we'll keep an eye on. As long as the price closes above those levels, we're still bullish, and the moment we close beneath those levels, we'll switch to bearish. These levels are the 20-period moving average, that's the green line on NASDAQ and this rising channel line, and the same thing on the S&P 500. Let's expand that out. There's the 20-period moving average, the green line. We've got a horizontal support line here as well, and it's also the channel bottom. A close beneath that channel on the S&P and a close beneath that channel on the NASDAQ will see us reversing direction into a bearish direction. And I think we could get a 10, maybe 12, 15% pullback on the stock markets in general before reversing and rallying up into the rate cuts and the elections. Both Apple and Tesla, I actually kind of like the long side on these, and I'd be waiting for dips on Apple and Tesla, and perhaps AMD and Nvidia for dips later on to buy into. It seems a little weird that these are the ones we're most bearish on at the moment, and that will also reverse to the most bullish on later on. But I think those are the plays that I'm comfortable with. Whilst we're talking about stocks, I want to point out one more chart to you, and that's Rumble. And this is the Rumble day chart. Now, Rumble is the alternative to YouTube, and it's gaining a lot of traction. There's a lot of reasons for this, and I don't want to go into the politics and the social media and big tech giants and the government intervention and interference and involvement. But let's just say I think there's a bright future for Rumble. Not only do I think that from a sort of a political point of view, but I also think from these charts you can see that there's a good opportunity to buy Rumble. This is the weekly chart on Rumble. Look how we've reversed off that low at around about $3.50. We're right back up at $7 again. But if I go to the monthly chart, just have a look at this. There's the IPO opening price at $10. We moved up a bit, actually all the way up to $18, a big massive actually post-IPO price rally. And then we dropped all the way back down to $3.25. Since then, we've rallied back up to $7 or $6.90 as we are at the moment. But a big reversal. I think there's a big future for this company, and I think the monopoly of YouTube is being challenged. And from a political point of view, in terms of what's going on in the social media space, I think this has got a bright future. There's the 20-month moving average, massive spike low on the monthly chart. Let's go back to the weekly chart. We're above the 20-week moving average, testing the 50, the 100's just above us, and the IPO opening price of around about $10 is pretty much in sight. On the day chart, we've blasted through the 20, the 50, and the 100. They were all together at one point, and we've actually closed just above the 200-day moving average. This is a very positive, very bullish sign for Rumble, and this is a stock that I'm going to be investing in. All right, so going across the metals, we're long on gold. That's still going sideways, looking very positive on Thursday, and then Friday we dropped off after the NFP. Nothing on silver. Copper we're short on. From 388, we're at 384, so that's barely moved a bit, but heading downwards. I think we've got a potential head and shoulders on this copper chart. And our target for copper is initially around about $3.50 and then probably down to $3 and maybe slightly below. Nothing on platinum, also falling off from Friday, along with gold and some of the other metals after the NFP. And then UEC and URA. We don't have a position long on UEC, but I'm waiting for a dip down to this trend line. And we had a long position on URA, uranium. We took profit at the top here on Thursday and just dropped off a little bit on Friday. I'll continue to look to buy dips on the uranium instruments. Right, so we're long on soya. That's failing a little bit again, but we still haven't made a new low. We're long on natural gas, waiting for the opening right now. We're at $2.08, just about our average price. We're long on natural gas. I'm not going to cover natural gas here. This is just really to give the positional update, but I will cover it in a separate video, which I'll make public a little bit later on today. We got stopped out of our cocoa short on Thursday after a massive rally, followed by a smaller rally on Friday, actually a bit of a hanging man, and a potential abandoned baby or island reversal candlestick pattern on cocoa. With a bit of luck, we'll gap down on Monday, create this island reversal, and then begin to move down. We've reached an all-time high price on cocoa. It's definitely a blowout top, but it's very, very difficult to pick the turning point on this. We'll have to be very careful. For those more conservative traders, wait for the island reversal, wait for this to gap down, and then move down on Monday, and then look to trade this on Tuesday, perhaps, if we see that sort of pattern. Wheat continues to look a little weak. We don't have any trades on that, and we remain short on WTI oil. We got in the very high 70s. We're at 72 now. I'm looking for a move down below 70 and then eventually into the 50s. We'll continue to play this by selling rallies, exiting on dips, as long as we're below roughly $82 to $84, this first order block here. And then above there, I'll also allow for a move up into the 90s. I don't think getting up into the 90s is the most likely scenario. And I think if we do get a bit of a bid on here, a bit of a rally, I think we'll probably stall in the mid to low 80s. So Bitcoin, I've got the Binance chart on there just because it trades over the weekend and BlackBull doesn't. You can see we've actually gone nowhere over the weekend, so no big deal. I'm long on Bitcoin from 39,700 and we're currently trading at 43,000, give or take a few pennies. I'm long on the VIX, as many other people are, and just because there are too many people long on the VIX, I think we're not going to go anywhere just yet. We may have to be a little patient on that. Too many people have got in on the long side, and, well, that's the power of social media. The US 30, I'm keeping an eye on this. I'm not trading this currently, but I'm also watching this little reversal candle on the US 30. If you are trading the Dow, that's something to keep an eye on. We did form a spike high. It is a reversal, hesitation doji, and this may continue upwards or it may not, but we'll be certainly watching that for a potential reversal this coming week. So that's it. There are a couple of things actually I want to show you quickly on the internet, which you might find useful in your own trading. First of all, if you're not following me on Twitter, on X, go across to ArcisFX, that's my handle on X, and sign up to follow me and press the notification bell. So whenever I post anything up on X, you'll get an alert. I post quite often, regularly throughout the day. Some of it doesn't make its way onto YouTube, quite a lot of it actually. So it's a good idea to follow me on here. And also you can join up with X Pro. I'm not sure if this is available to free X members or not. I think it is. And it's just called X Pro. The actual URL is pro.twitter.com. And you can arrange this as you want, have a fiddle with it. You can put various news feeds on here and they update automatically all the time. So whatever you happen to be watching, these are some of the things I watch. You can just put up there and you can keep an eye on your favorite news feeds. One more thing I came across yesterday was this thing called ground.news. I've signed up for it and I'm paying for it, but I think it's super interesting. Let's get rid of the cookies. And basically what it does is it picks out the trending topics, the trending news across a variety of platforms, all sorts of different mainstream and perhaps alternative media platforms, including maybe things like Facebook and so on. And if you click on an article, it'll take you to that article and various other similar articles. You can see how many there are, and you can see where they're reported, and you can also see what sort of distribution the sources are. So left wing, right wing, centrist, and also the actual media sources where you'll find them, and you can click on those to investigate those a little bit more. Pretty cool tool. It's really cheap. I think it's about $4 or $5 or $6 a month, and I'm going to try it out and see what happens. So I just wanted to show you that. Have a great trading day, and I'll speak to you soon.